Okay, how you guys doing? So here we go, lesson number 5. Do not get fooled with indicators and charts. Do it how in Wall Street gets done, with price action, price activity, understanding where is the market buying, where is the market shorting, and how you proceed with the right strategy every single day. Again, my name is Karina Fabi, and we're just going to go through the book Price Action for All. You can get it on Amazon or from my website at watchmytrade.com. Let me show it to you. Every day, you're going to have the updated price activity, because many times in fact, you won't see the price analysis the way I do it, the way most people in Wall Street do it, or the way it should be done, at least. So let me show you where you can find it. Whenever I see that the price activity is actually changing the course of the prices, then you're gonna find it. So here's my website, watchmytrade.com. You're gonna find it here, how the market behaves during the day, what is needed. Okay, so my native language is not English, so just try to bear with the translation. Hopefully it will get understood for you, since of course you know about trading. And so this is today we are Wednesday, October 4th. All right, so and in these lessons just basically want you to get an insight on how you get to actually understand the price activity and how you can do it yourself. Okay. Today was a very special day, and we got still in sell strategies with the euro, with the pound dollar, and long on the dollar, of course. So we're gonna get to price map, how you set up the map of your prices, how you basically understand the market areas. And that's a concept that I talked today in my trading session. I run a trading session every day. So today was basically very focused on just keep in mind where you are trading, what's the market area. So the FX market, the currency market, it is not a trend market. You basically you don't consider like an uptrend or a sell trend. There's no such thing as buyer's trend or seller's trend. We talk in the FX market, in many other markets, buyer area in seller's area. And what that means is that when you are in seller's area, you're going to see the market going up some days, but you're going to stick to the seller. So you're going to be safe on that seller area. Okay. And the contrary in the buyer area is where you see the market just prevailing to just go long. But some days you're going to see the market going down. So you're going to see sellers, but you're going to stick to the buy strategy. That's very, very important. So let's just a really quick example here for you to kind of bear with me with this very important concept, because I see many times traders getting stuck with stop loss activation and things that this shouldn't happen. You know, stop loss shouldn't be an issue for you. And honestly, I'd rather expire the trade by myself and not really counting on the stop loss. But that's another story. I'm going to talk about it in the further lessons. But stop loss situation, I keep saying, just don't get so caught up on the stop loss. Just try to expire the trade by yourself when you see that there's no longer a confirmation on your price. So before I get to the book, which of course this I explain in the book, but the market situation today is quite an example in how you won't get fooled with the charts and indicators, because you're gonna see, as today, October, everything oversold, everything overbought. And so what? You know, overbought doesn't matter. We're gonna still pushing the dollar up. We're gonna still pushing towards more buyers. You know, oversold, same thing. we're still going to go short. Okay, so don't get confused that the indicators will tell you that's it, this is the bottom, that's it, that's the high, that's the year high. I've been saving traders for many, many years. For the last, I'm gonna say 13 years since I'm doing this. I keep saving traders that they come to me to trade in my live trading sessions, and considering that the high means a short and a low means a buy. Well, that's what the common trader do when you don't quite understand what the market level you are in. So you have to be on the safe area. Let's give again an example. Let's say we are now with euro dollar, and euro dollar, I'm going to explain really quick. The buyer area is above the 110. So above 110 with euro dollar, you know that you have to just go long. So the market's going to go down, you go long, it goes up, you go long anyway. You try to avoid the short. But below the 110, you want to go only short. Some days you're going to have spikes of buyers. But those buyers, they really know that they don't belong to the area. The buyers in the sell pressure area, which is below the 110, which is the seller area, the buyer, they don't care. They won't hold the euro unless the euro is above the 110. So what happens today? Let me show you really quick here in the market. And I hope you have a good broker, because if you don't have a good broker, forget about price action. You really need a transparent broker to go with price action. And you're going to hear that from me in every single lesson from now on, that we are getting really into price activity. So I'm just going to go ahead, go to, well, this is the broker that I use. It's One Financial Markets. They are FCA regulated. They are from UK and is working along with Axie Trader. So this One Financial Markets. So what happens today is this. I've been looking at the other market, other traders, other people that do analysis in the markets and so forth. And I keep looking at the analysis saying, just try to keep an eye on the buyers on euro dollar. Try to keep an eye on the buyers on the euro dollar. So when I see that, the next day I say, get ready to short the euro big time. Because when you see the year low, the 2 years low, the 3 years low, it doesn't matter. You want to stick to the seller. That's the safe area. That's the safe area. So below 110, all you get to do in order to don't get stopped for stop losses all the time and all those things. Again, try not to use stop loss. I'm going to go through that point later on. I expire the trade when I don't see it as a good trade, and then just wait for the next confirmation. But today, for example, here, well, I do scalping. I don't know if you know what scalping is, but I grab the range of the day. So today, for example, Europe opened down here, and then it went all the way up to here. And this is the US market right here, the US opening hours right here. So I shorted the euro. All I did today was this, just waiting on the shorts. And then the closing of the market was on this level, some other buys, and then I shorted again. And then here I stopped trading completely. I just do 3-4 hours of trading, that's it. And then if you see here in 1 hour, but I use the 15-minute time frames, and I keep looking at the buyers all day. I was looking at the buyers, looking at the buyers, looking at the buyers, and I was really waiting on the highs, waiting on the highs, waiting on the highs to short, because in that way, you know that first of all, you don't need any stop loss, or you don't need to expire the trade, because you're in the safe area. So when I get concerned is when I'm going to go for a strategy against the market area that I am in, against it. Like if I were to buy, for example, today on the euro, which is not going to happen. To me, I'm going to start doing buy strategies only when I see at least the 107, but then I'm going to have to expire the trade if I don't see the buyers getting kind of strong enough. I'm gonna get to the detailed of price action on the 15 time frames and 1 hour as well later on the next lessons. But I just want you to have a clear picture of why the chart will fool you and why indicators won't give you the right strategy all the time. You have to be one step ahead. So you know below 110, if the market goes up, you wait for the retracement on the price and you go short. You're gonna see buyers. Yes, you will. But in order not to get stuck with a buy trade that is going to get you stop out all the time, then what you're going to do is basically just wait on the seller. What's going to happen next here for euro dollar, for example? Well, I'm going to wait to be below the 105 to short the euro dollar again. And if tomorrow euro opened for buyers on euro dollar, and let's say we have the euro, for example, at the 105.30 or 105.50, I'm going to short from those highs. Okay, because the euro keeps pushing down new lows. Eventually, I'm going to switch strategies, but not for now. The dollar is really high and is really pushing the market, the dollar. So if you want to be safe on the euro, also on the pound, try to get into just short strategies. Okay, so I explained that here. Let me see. I explained that. Okay, so the buyer and seller queue, how you understand what is located the buyer, where is located the seller. That's basically the statistics. The stats with price action are something that we grab and we say, okay, from the last, let's say 15 years, 20 years of the euro, what happened below 110, what happened above 110. So statistics and the price action activity will tell you that above the 110, the market was always holding the trades, always holding in the euro because they see the value. And I explained that today also in my lessons on my live trading sessions. And I said, what do you think that for example, gold is valuable today in the retail market? Why do you think that gold's still something that people will pay for it a lot of money? Because they see the value. You pay for something that you see the value. So if the euro is not valuable for the market, you won't pay for it. It's not worth it. You won't pay for whatever it is. Just you don't want to hold the euro. You don't want to keep the euro with you as a currency, as a saving currency, as something that is going to gain value. And that explains everything in the FX market. Okay, so when you when you pay for something, it's because you see the value. So you want to hold that currency. And when you hold it, when you actually have that with you, it's going to gain value over time. And when you sell it, then it's going to lose value. So that's what's going on the euro dollar, and that's why it keeps trading on the seller's market area. Same the pound dollar. Okay. Well, focus on regulation. I keep saying just go for regulated brokers. Hopefully you know that. Okay, so price action is the reading of the financial market based on supply and demand of a financial instrument. The law of supply and demand applies to forex, stock index, commodities, and other assets. So now the index, for example, indices is quite different because the index, it is a trend market. It always tends to go up unless a crisis comes, unless something happens and then you have crisis, whatever, and goes down. So there's no such a thing as buyer area or seller's area on the index. That's a trend market. It tends to go up if something happens in the middle, like it's going on now, which is the market, all the market is crashing. But it is a trend market. Stocks is not a trend market. There's no such a thing as uptrend, downtrend, Elliott waves, or whatever. Just don't get fooled with all those theories. So let's give an example. And I like to exemplify how the price action is being simulated this with this example. Imagine that on a given day, you can divide two columns, all the prices quoted in the markets. One with buy prices on one day, and the second column with all the sell prices. So you don't have the candlesticks moving around or the shapes of the charts, right? You have just one column sell prices and another one buy prices. Well, that's what price action is. So before you start trading, you know what buy prices you have, what sell prices you have. That's all you gotta know. We're gonna get to that point in further lessons. So again, if you tell me one price now of whatever market I do, I'm gonna know if this is a buy price or if it is a sell price. And I don't need indicators for that. I don't need a chart. I don't need a breakout support resistance analysis. I don't need any of that. So that's the fun and the magic of price action, because at the end of the day, you're going to feel that you have so much power understanding the price activity without, trying to figure what the moving averages are doing and what's the Bollinger and bar trying to tell you whatever. That's not the way you trade today. Today, you need to be one step ahead of everything else, everything else, everything else. And that is to get really smart understanding the price activity. So the object is to imagine those two columns grouping the sell prices and then the buy price. The question we ask ourselves is how to extract the information from a chart that is consistently moving. The answer is through market history. So through market history and stats that the market is telling me, I know that, one more time, the 105 from the euro, above 105, I know I can buy, below 105, I know I can sell. I know that below the 105.50, there is a sell price because it's a high in the seller area. And you're going to keep having those same conclusions over and over again. And that what makes you actually an expert on reading the market through prices and not through indicators. Because that's basically how the market is being assimilated today. Everything is on buyers and sellers, buy prices and sell prices. The indicator is just something that will not get you one step ahead. So you need to know when is the buyer attacking, where is the seller attacking, what is the market trying to accumulate the transactions when they're taking their profits out of the market so you can jump in and sell. Okay. So the history of the past activity of the asset will give you that information. I'm gonna, in the next few lessons, will show you how to actually can get that information. What we do is to move horizontally on the chart to understand the price that logically moves vertically. So what you want to do is to grab, for example, the whatever instrument you want to do. And then understanding what is the buyer trying to get in the market. What is the buyer trying to see what's coming? What is the seller trying to see what's coming? In case that you have on the seller side of the market, on the sell market area. Okay. And that's quite easy to see it. It will take you like 10 minutes to grab an instrument and to set up the price map. Once you have the price map, which you do once, then everything else is the very easy part, which is you wake up one day, you see the price, you see, okay, that's the buy price. That's it. You grab it. If you want to scalp it, you can scalp it. If you want to just grab the swing, you can grab the swing. If you want to hold the trade, you can hold the trade, because I've been holding sales on the euro dollar since the 107. I have sales on the 107 and below. Okay, so this account I'll show you is the account that I use for my live trading sessions, which is not the actual that I use for my own trading. But when I let me show you here what's been going on today, because I do scalping. I teach how to scalp the market. Of course, you have to do it with a real account. I cannot go demo on anything. So let me show you the scalping that we did today. So here we go. Today was all of this. I don't know if you can see it. It was a very heavy day, so the scalping was fine, and I had to go with small contracts because most of my traders have uh, maybe $2,000, $3,000 accounts, so I had to go with small contracts, and this broker will give me 1 to 400 leverage. So it was a pretty good day just to show it a scalp. Of course, we just short the Nasdaq and the euro. That was the strategies for today. It was just one expiration here that I did. I expired the trade completely. Can't remember why, but I expired the sale and I shorted, I think, above. Okay, but again, this is to show that you can do a scalping with price action in a very perfect way, or you can do the swing of the day. So basically, I could just short the euro at the highs, at the 105.20 or the 105.30 today, and then close it at the 105.10 or the 105. Just go for the swing. Or you can scalp it in 5 different transactions just to make sure that you get all the swing for you. Okay. All right, well, just the equilibrium price directs supply and demand volume within the trading day, and not the opposite. Well, this is something that I keep telling to the traders. Look, the chart will not, or the shapes of the charts, like candles or the patterns or the breakouts, this doesn't matter. You're going to be trading before that. You're going to be inside the breakout. You're going to be inside the consolidation anyway, trading and doing that. So just don't focus on the charts. One more time, you focus on the price. The price is shaping the chart, not the chart shaping the prices. It's completely the opposite. So in order to be one step ahead, just focus on the column of the price activity. Make the lines on the chart later. Okay, that's a buy price. That's a sell price. You're going to be holding the buys there. You want to be holding the sells there, but now the opposite. Okay. All right. So next lesson, I'm just going to keep trying to get farther and farther towards the map price so we can just get a little bit more into practice. Okay. And then we're going to go understanding the institutional markets, how they think, how they trade. That will help you a lot to, if you're a retail trader, because that's where I'm coming from, big volumes. So I'll tell you what we think. What's the frame that we consider as, okay, that's a good level. So once we jump in, that's it. That's all you need to know in order to just get the right lows and the right highs. Okay. Also going to talk about gold. I like gold a lot. And today's market conditions, of course, is not something that is quite common. Everything's crashing pretty much, and dollar is just really going up. But again, that's the fun part of this, because that's when really professional traders that use price action would really get one step ahead of what's going on. So you can short the market, you can buy a market on any scenario and any situation, and you're going to do fine. And I see retail traders getting stuck on these days where you have very important lows, very important highs, and you keep trying to buy on the lows, getting stopped out all the time. And with price activity, that's not going to happen to you. I guarantee you that. All right, guys, I'll see you on the next lesson. I hope you enjoy this quick brief for price action. Again, my name is Karina Fabi, and you can find my book on my website. And again, of course, you can find the information on price activity when I see that is something that I have to update here on my website. You go to the English translation. I'll see you all. Thank you. Bye-bye.